Hey everyone, me Kevin here. Boy, oh boy, GameStop is down about 8.5% in after hours despite beating earnings expectations and beating on the bottom line. This has to do with a new share offering. GameStop is putting 5 million new shares on the market for sale. That'll raise about $1.38 billion for them, which is massive amounts of money. With this, they can pay off some of their higher interest rate debt, and hopefully they'll be able to expand their company and sort of reimagine their company. In the 10-minute earnings call, we heard this news, which was not so great news for existing shareholders. But remember that money does end up going to the company, even though it's 7% dilution. And even though right now the share price is down 8.5%, this is good for the company in the long run. They're replacing expensive debt with basically free money in the form of the stock market. And when I say free money, I really mean your money, since you're the one who's getting diluted as a shareholder. Now, GameStop did talk about the fact that they added a 700,000 square foot distribution center. They talked a little bit about how they plan on paying off debt. Talked about their new former Amazon executive who's coming on as Chief Financial Officer and as CEO. Ryan Cohen was also elected by shareholders as head of the board. We didn't get much color, though, in the earnings call, and this was a little bit disappointing. We didn't get a lot of details on really anything. We didn't get details on NFTs, on store revamps. We heard that, yeah, they're hiring people in different fields throughout the business, but no breakdown of online versus in-store sales. A lot of sort of detail missing in the earnings call. We do know top line numbers like net sales growing 25% to 1.3 billion compared to the first quarter of 2020. This is great. We've got gross margin at 25.9%. This was a decline of 1.8 percentage points. And they have an operating loss of right now $40.8 million. That is compared to a $108 million loss compared to the first quarter of 2020, which obviously encapsulates March, which was the start of the pandemic. Now, they are running a net loss of about $66.8 million in total. And this 5 million share offering comes after they raised $551 million in net proceeds through the issuance of 3.5 million shares of common stock earlier this year. Now, jumping over to some of the technicals for GameStop, we are presently, according to S3 Partners, at 19.26% short. This is down from a recent peak that we've seen around 22.4% short. And then, of course, if we go year to date, you'll see that the short interest is substantially lower than that 149% that we previously sat at. This was, of course, the big GameStop squeeze right here. As we saw the short interest go down, we did see some price volatility. It's also worth noting when we look at the put-call ratio here, this is a screenshot from the Bloomberg terminal. Shout out to Bloomberg for allowing the sharing of this. Appreciate that. So we've got the put-call ratio here. I'm going to hide myself for a moment here. Put-call ratio, once you're at 1, it means you have an equal number of puts to calls. When you're at 0.26, it means for every $1 in calls we have 0.26 dollars in puts. You can see that put action really peaked here at around 2 to 3x call volume, and this ratio has obviously substantially come down, and so it appears as though GameStop is being synthetically shorted less than it previously had been, at least in regards to put-to-call volume. Now, keep in mind, put-to-call volume is just a snapshot in time, so there are obviously many people that could have substantial amounts of puts still existing. This is just new put volume or trading volume with puts. Now, going to some of the technicals, obviously GameStop is reaching some of its all-time highs. Of course, all-time highs were realistically as high intraday as 483 at one point. We did have a high of 380 before that and a high of 413 the day after that. So at 306 on the day, we were approaching these new highs. We are going back to about 275 now thanks to the share offering. We are substantially above the 142 support line. This was a support line that was pretty powerful for GameStop for a while, so I would pay attention to this support line here. 142, you've got a triple, almost quadruple peak right here, or touch onto our support line, so very strong support at 142, a lot less support at these levels here in the 200s. All we really have are prior resistance levels, which maybe we could use again. For example, top of the candle here appears to be right at about 275, which is where we sit now. But we have a very brief period of time that we've spent in this level here. So I'm a little uncomfortable suggesting that as a support level. Maybe another support level could be here at about 253. maybe 230, somewhere around here. These are going to be softer support levels. Nothing as strong as that 140 level where GameStop traded for a while. That does, to me, indicate that I don't believe we're going to revisit these low levels over here, like GameStop sitting at $41, $44, and so on. And that instead, we might revisit this sort of 150 territory, 140 territory in the near term if GameStop continues to raise shares or sell shares without providing new reasons for adding more money or investing short of just getting diluted, right? What we really want to see is GameStop paint a vision of progress for the future to say, hey, you know what, Ape Army, we're together on this. Your AMC, GME, we're doing this together. Very, very important. Unfortunately, right now, GameStop is not doing that. I think part of that is because they honestly don't even know where they're going with their brand yet. So they're putting the right people in the right places. In the meantime, they're potentially just trying to stand by and wait this one out and see what happens, which is a little frustrating as a shareholder, but in time, we'll get more insights from GameStop. So here's an update on why GameStop is selling off a little bit. Hopefully we get more clarity on their exact plans. We didn't get much color today. We weren't really expecting to get much, but we certainly were hoping to get more than just, hey, yep, we're raising 5 million shares and we're working on it. It's kind of what we got now, down about 7.36% at the time of this recording. Thank you so much for watching, and folks, we'll see you in the next one.